Good morning, good morning, good morning. Welcome to the Morning Blast with myself, Mr. Michael Brown. It's Wednesday, the 19th of February. It is 7:30 in the morning London time. We are an hour earlier because, as Zach rightly points out, it's basically just the Michael Brown show. we all live in a Michael Brown world. Poor Zach, he put together some overnight news roundup for me an hour early. He's fuming, I'm fuming, we're all fuming. But it makes Mr. Michael Brown happy.
Indeed, I'm sure you'll all get over it, and it makes a nice change for young Zach to be doing some work rather than swanning around on holiday, to be honest.
Well, I'm not going to stand for that. He works his bollocks off.
No, he's a good morning, lad, really.
Friend. Good morning. Good morning. What's been going on then?
Indeed, yes.
Where's me breakfast?
Well, while you go and make yourself a cup of coffee and get yourself some breakfast, we can run through what happened yesterday, which, in short, was not a lot. Once again, markets continuing to really hunt for a catalyst, although it must be said that liquidity was much improved and volumes also considerably healthier as US participants returned from the President's Day long weekend. And as a result, we saw equities just slowly but surely grind higher, the S&P rallying about 0.25% on the day and actually ending the day at a record high. The Nasdaq 100 gaining about 0.2% and notching a fourth straight daily advance. The other equity story that is of note, just for those who have been watching it, of course, Meta having that 20-day winning run, the best of any current S&P 500 stock since all the way back in 1980. Well, it's over. They fell by about 3% yesterday. So that run has come to an end.
To be fair to them, it's a healthy pullback.
Oh, absolutely. After we've moved that far in the space of a month, it's not at all surprising. We saw that kind of meandering vibe really sort of permeate across all other asset classes, to be honest with you. A little bit of softness across the Treasury curve with 2- and 10-year yields ticking higher by about 3 basis points apiece. The latter this morning trading north of 4.55%. And as a result of that modest softness in Treasuries, we saw the dollar grinding higher across the board. The dollar index trading north of 107, most other G10s softening, with cable briefly below 126 and the euro surrendering the 105 handle once more. In terms of fundamental catalysts, they were somewhat lacking. We did have something of a miracle come out of Germany, though, where we had better than expected ZEW sentiment data. Indeed, the expectations index rising to 26 in February from a prior 10.3. That is the highest level since July of 2024, although it is worth noting that the commentary around that release suggested that basically all of the increase was due to hopes that, to cut a long story short, whoever's elected in Sunday's elections will sort out the shit show that is the German economy. So that bounce in sentiment may well be somewhat short-lived. We also had inflation figures out of Canada yesterday. Headline CPI rising by 1.9% on an annual basis in January, bang in line with market expectations. In terms of news flow, it was also relatively light on that front as well, to be completely honest with you. Here in the UK, we heard from Bank of England Governor Andrew Bailey for the second straight day, very much echoing his language from Monday and also from the February Bank of England press conference, reiterating that disinflation is continuing, that there are risks on both sides of the economic outlook, and how the Bank of England's gradual and careful language reflects the heightened uncertainty that we currently see in terms of the monetary policy outlook. And of course, speaking of that, it's worth noting that about half an hour ago, we had the latest inflation figures out of the UK. Headline CPI rose by 3% on an annual basis in January, well above the Bank of England's forecast for 2.8% and also above the top end of the economist range per the Bloomberg survey. It's also the fastest annual inflation rate since last March. In terms of the other parts of that data release, we also had core CPI that rose by 3.7%, pretty grim. Services CPI, though, maybe a little bit of a silver lining, rising by just 5%, below the BOE's forecast of 5.1, but still a pretty chunky uptick from the prior 4.4%. Lastly, in terms of the UK, Rachel Reeves, she has called in senior financial services executives from the likes of Goldman
Sorry,
and JP
I
Morgan.
really should just start giggling as soon as you say her name.
Oh,
Fucking
I
hell.
know. Well, I mean, she's using up what's left of her borrowed time, I think.
Oh
They are
God, no,
coming
no,
in.
she's in debt. She's in time debt.
They are going to see the Chancellor for talks today. She is continuing to scrape the barrel and clutch at straws and try and find ways of growing the economy. To be honest, I think the only growth industry in the UK at the moment is catering services for all these bloody summits she's holding. Everyone else is facing very, very
Trade that
stiff
never
headwinds
loses.
indeed. Exactly. A couple of notable headlines, both via Bloomberg. The first, that a whole host of central banks within Europe, in Italy, Spain, Germany, France, among others, they are lobbying the EU Commission to try and simplify some of the bloc's banking rules. They seem to have finally realised that the ridiculous amount of red tape in the Eurozone is putting Eurozone banks at a disadvantage to international competitors. Not sure what took them so long to wake up to that fact. And also we heard via Bloomberg sources last night that BP, and Ryan, please don't laugh at this, they are said to be mulling the sale of their lubricants unit. This is, of course, after activist investor Elliott took a stake in the firm. The lubricants unit trades under the name of Castrol, which I'm sure everyone is familiar with, could be sold off for about $10 billion. And the BP are set to potentially announce this and other changes to the structure of their company at the upcoming Capital Markets Day, which takes place next Wednesday, I believe, but please don't quote me on that. Last but by no means least from me this morning, we did have a policy decision out overnight from New Zealand. The Reserve Bank of New Zealand delivering a 50 basis point cut, lowering the cash rate to 3.75%, as markets and economists have been expecting. The guidance was somewhat more dovish than consensus had foreseen, though, with the RBNZ noting that there is scope for further cash rate cuts in 2025 if the economy evolves in line with its forecasts, and Governor Adrian Orr explicitly noting that the RBNZ's path for the cash rate projects 50 basis points of cuts by the second half of the year, with, and I quote here, expectations of cuts in April and May being about right. So it seems like the RBNZ are going to maintain a relatively dovish tone for the time being. The same, of course, cannot be said for the Bank of England after the grim inflation figures that we had about half an hour ago. And that's all from me for now.
Absolutely that. Well, thank you for that, Mr. Michael Brown. Also, as usual, big shout out to Zach, especially today for putting the overnight news roundup an hour early, and also Cam for the crypto blast that will be coming along shortly. So just some headlines via our overnight news roundup. What have we got? Macro. US President Trump said as soon as April the 2nd, the US could impose a 25% tariff on imported automobiles, pharmaceuticals, and semiconductors. Trump threatened these could rise if companies don't build factories in the US, whilst also hinting that countries could negotiate lower tariffs. Said companies in the US may be given a phase-in period to give them time to move their production onshore. Sticking with the US, the Senate yesterday voted 51 to 45 to confirm Howard Lutnick as Commerce Secretary, putting in place the billionaire Wall Street veteran turned avowed protectionist to lead the president's global trade agenda. Trump signaled an executive order designed to strengthen White House control over quasi-independent, or quasi, as I think the US call it, quasi-independent regulatory agencies, including the
I thought
FTC,
he was the
the
Chancellor.
FCC. Hey, see, well played. And the FCC. The order said it wouldn't include the Federal Reserve's handling of monetary policy. Of course it wouldn't. Anyone that suggests it would needs to give their head a wobble. Moving across the Pacific, Japan's exports rose for a fourth consecutive month in January, led by auto shipments to the US ahead of potential tariffs, also known as front-loading a tariff. So there you go. Get all your cars and all your exports sent over before they come into play. Business sentiment for Japanese manufacturers climbed for a second straight month in February, as expected to have improved again by May, albeit modestly. Taken from the Reuters Tankan poll. What have we got over that way? Home prices in major Chinese cities continued to slightly narrow their decline in January, down 0.07 month on month versus 0.08 month on month in December. That equates to 0.54 year on year versus 5.7 down in the previous, suggesting that Beijing's policy blitz may have helped stabilize beleaguered real estate sector. one swallow doesn't make a summer and all that, and also Chinese data. Yeah, we're not really sure how much faith you can put into that, but yeah, there you go.
It's also worth. I completely agree with you. It's also worth saying that that is coming off a pitifully low base anyway. So.
Yes, yeah, absolutely. BlackRock goes well, as well as being invited in to speak to Rachel Reeves over some scones about how to improve growth, and also cover our countryside in solar panels. Oh, Ryan, don't get political. BlackRock goes tactically overweight Eurozone government bonds, reinforcing its preference for them due to tariff risks. Meanwhile, it stays underweight long-term US treasuries, noting persistent deficits and inflation in the US make BlackRock more positive on fixed income assets elsewhere. Going South America, Brazil. We're getting a right geography lesson today.
Oh, really?
Pardon me. Brazil's Attorney General's office charged former President Bolsonaro on Tuesday with plotting to overturn his 2022 election loss, as the country's authorities zero in on one of President Trump's closest allies in South America. Sticking with geopolitical vibe, US President Trump has criticized Zelensky, saying he was disappointed that Ukrainian leader complained about being left out of talks between the US and Russia over ending the Ukraine war. Trump also said Ukraine started the war. So it's a bit of a shift in language here, which which will anger many people. So want to keep an eye on, not least, of course, EU officials and the like. Speaking of EU officials, they're meeting after their meeting with Trump's Ukraine envoy Keith Kellogg. Said they've been given little details on what the US wants to see from Europeans as part of the security guarantee. It's all a bit vague. A few equity stories here. We got Elon Musk's X/Twitter, and also when we're talking about Twitter beers that we're organising for March the 7th. When I say X's, I don't mean Generation X. I mean people who are on Twitter. I mean, come on. I don't give a shit how old people are. Most of my friends are fucking geriatrics, and I see a couple of them listening now. No offense to
probably
Dominic
include me in that as well,
and you and Dunny and morning guys. Oh god, my phone's about to blow up. Elon Musk's X/Twitter is in talks to raise money from investors at a 44 billion valuation, which happens to be the same price that Musk paid for the company in 2022, which would be a remarkable turn of fortunes for the company after many users and advertisers fled the site after Musk's takeover. Just a bit of, I guess, anecdotal vibes on this. Yes, we keep seeing record numbers of users and whatnot on X, but I can tell you firsthand from an account that I don't personally post, but we post as an account probably 400 tweets a day, and the last 3-4 weeks, then I mean, like spammy bots, kind of like, oh, I follow so and so, he's made me £1 million. Those bots have been around forever. For the past 3 or 4 weeks, they have been relentless. I mean, like there is so many. Like I was blocking like 50 a day at one point for about 2 weeks. So now that's why some people might notice that we've actually restricted who can reply to the tweets, because they're just auto-generated. So I do love Twitter, and it's helped me form the company PIQ, our platform behind the Twitter account, all that stuff. But I'll be honest, for the first time in a long time, I'm starting to look at Twitter and going, this is just becoming a bit unusable. So hopefully they sort something out on that front. Bill Ackman's Pershing Square submitted a new 900 million offer for a boosted stake in Howard Hughes Holdings, pledging to turn the real estate company into a diversified holding company akin to what the billionaire investor called a modern day Berkshire Hathaway. For those who aren't aware of Howard Hughes Holdings, they also, one of their kind of big investments, or one of their kind of areas that they like to invest in, shall I say, is like mini cities and kind of like purpose-built whole kind of communities and stuff. And I saw a tweet by Bill, big old Bill, saying that this could be a really good thing for the future in terms of it's a really good pro-business and industry to be in. And these small communities that they're building, which include hospitals, schools, everything you need in one place. They then turn into cities in kind of over the course of decades, and then you end up being king of the castle, I guess. But there you go. That's it from me. back to you in the studio before I keel over on lack of coffee.
Well, what more could one want than Bill Ackman owning their house and running their city? God help us. Right, in terms of today, then, to be completely honest with you, the economic calendar is rather uninspiring. We have nothing else really due throughout the European session this morning after the UK inflation figures earlier on. What do you mean, oh?
I said pub.
Oh, I see. Right, sorry. I heard you say "oh" and then a seagull. I thought you'd been kidnapped or something.
Oh,
anyway,
yes, I do need to move away from the sea, to be honest.
After the quiet of the European session this morning, we do have a few bits and bobs in terms of second-tier releases throughout the UK afternoon, US morning. At 1:30 London time, we have the latest housing starts and building permits figures out of the United States. Bear in mind that this is January data, and January saw not only the wildfires in California, but also a pretty cold snap across other parts of the United States. So there are probably downside risks to the consensus estimates there. Housing starts seen at 1.39 million, building permits seen at 1.46 million. In terms of other bits and bobs to keep an eye on today at 6 o'clock this evening, we have a 20-year bond auction in the United States, $16 billion worth being sold off. And then on the monetary policy front, we are due to hear from the Fed's Jefferson. He will be speaking much later on today at about 10 o'clock in the evening London time. We also have minutes due from the January FOMC meeting today. Of course, the Fed leaving rates on hold at the January meeting and indicating that they will be on the sidelines for some time to come. Money markets do not fully price the next 25 basis point Fed cut until September, while pricing in about 35 basis points of easing by the end of the year. And last but by no means least, again, towards the back end of the day, we are going to hear from the RBNZ Governor Adrian Orr once again. This time he is giving some testimony in Parliament. And of course, the usual warning that there could be a tweet or a Truth Social post or a headline from Trump on the trade front at any moment in time, which will probably see conviction remain relatively lacking as we move through the remainder of the day. And that is all from me this morning. And thank you once again to everyone for being up bright and early to accommodate my diary.
Oh, you're very welcome.
Even Tom Talks Cars is out of bed.
Is he? Is he listening?
He's here, yeah.
Oh, there he is. Bloody hell. You know what? He's probably shit the bed.
Oh, no. Oh, shall we end it there?
Well, on that bombshell, Mr. Michael Brown, well, I'm glad we could accommodate you and moving these around.
Back to normal tomorrow.
Back to normal tomorrow. Complete shambles back tomorrow. Oh God, I give up. It's too early for me. Right, I'm going back to bed. Listeners, thank you as always. Michael Brown, thank you as always for being awesome. Again, keep an eye out for the overnight news roundup via Zach, which will be along shortly, and the crypto blast, which will be later on. And after that, even the grain market blast at lunchtime with the awesome Angie. But for now, that's it from us, and you'll hear from me and Michael Brown in the morning blast tomorrow. See you later.
Bye bye.
Bye bye.